Good morning, ladies and gentlemen. This is Clueless 8, and this is a pre-market AM report for July 9th, 2015. As predicted, forecasted, and repeatedly stated in my private real-time Twitter feed, as well as in the chat room, that there would be a sizable, and I called it a violent reflex rally, aka dead cat bounce, to predetermined tactical levels that I've shown repeatedly on my charts, both on the S&P 500, the Russell 2000, the NASDAQ Composite, as well as the Dow Jones Industrial Average. That sizable bounce that I've spoken about repeatedly over the last 24 to 48 hours, and that would happen within the next 24 to 48 hours, starting yesterday, is in progress as we speak. Keep in mind, this is a very strategic, technical market. Retail investors are not, I repeat, not driving this market. There is emotional selling. There's no question about it. I'm sure a large number of mom and pop type of investors, which are the majority in the United States and elsewhere, are calling up their mutual fund companies and asking them to put their monies into money market accounts. It causes the mutual fund managers to forcibly sell what's known as forced selling equity positions and put money into money markets and in safe haven type of, well, mistakenly, I would say an alleged safe haven type of instruments such as U.S. Treasury bonds, which have over the past couple of days, because of the large inflow into the Treasury bond market as a safe haven play, have dramatically risen in price because of the demand as money flows into the U.S. Treasury market. 10-year bond, for example, and that's caused the yields to drop. Remember, there's an inverse correlation between price and yield. Every trader, every investor should be aware of these basic correlations. So here's the bottom line here. This is what it comes down to. At this point, I'm showing you behind me the E-minis, which are up 23 points to 2062. You can see here the volatility patterns, which have been extreme, but has been very accurately forecasted and explained in detail to all Clueless 8 members, and far more in detail and analyzed and dissected for advanced coaching session members, who should not be surprised one bit that, give or take a few points, every level that I've spoken about has been met, whether on the upside or the downside. In this case, the downside, because the market's been very weak. So here is what it comes down to. And for a lot of the new members who are listening to this video cast, I welcome you to the Clueless 8 service. I want to remind you I'm a very unorthodox, precise, analytical, and I have a very broad view of what's going on. So what that means to you as new members is that you have a slight learning curve, and there is nothing wrong with that. Every good thing in life requires some learning. If somebody wants babysitting and spoon feeding, they are not going to get it here. But if somebody wants some constructive, powerful, profitable, wealth generating type of ideas, an understanding of the broader market, and a basic understanding of global economics, then you've arrived at the right spot. So I welcome you all. I urge all of you to track the Twitter real-time feed, which is the conduit for my deliveries, for the trade alerts, breaking news, analytical comments, all kinds of stuff. The chat rooms are great for discussion. And of course, the video casts here are great for overall general knowledge. If you want to have very specific type of instruction in how to analyze and profit 110%, and that's a figure of speech, by the way, from my tactical charts, feel free to join the group sessions which I hold over the weekends to help everyone do it for a very minor cost. Okay, let's get straight to the charts here. We have the S&P 500 E-minis back here, which are the backbone behind all the market movements, most of the market movements. And this is what I see. At this point in time, we are having a large bounce of a triple bottom on the stochastics. You can see that down here, a triple bottom on the stochastics. And keep in mind that despite the retesting of the lows yesterday, and I'm going to zoom into this in a second, of around the 2030 levels on the E-minis, we had a slight positive divergence on the McClellan oscillator. Now, what does that mean? That simply means that the McClellan oscillator did not get down towards that minus 195 level, as you can see here on the right-hand side, minus 194.41, instead made a slightly higher low. Now, that positive divergence, I believe, is getting played out right now. And of course, we want the McClellan to start moving up, cross over the zero, and get overbought at that point or close to these points would be our sell exit points for trading longs. Keep in mind, traders have to be cognizant and fully understand the backdrop of the futures as well as the market in order to know how to manage their trades and most importantly, stay in their trades. Know when to cost average down, bring your cost down and sell in these into, in many cases, this type of days where you have a massive move, which I believe will continue through Friday. And let's see if that happens. And that's what I call shooting fish in the barrel. A couple of days or a day of sacrifice. The pain of sacrifice is far less than the pain of regret. I can assure you that more than 99% of traders out there are regretting they did not buy the market yesterday, as I was and as many of our members were. Okay, so here we are. So how do I read this chart here? First of all, very importantly, the E-minis, which correlate with the S&P 500, add maybe 5, 6, 7 points to it. So 1960 E-minis would be 1967 on the S&P 500. This is the dramatic critical level, the 1960. If that breaks, we're going into the 1800s on a very large drop on the E-minis. Obviously, for that to happen, the Dow has to drop 200 points, and I'm sorry, the S&P has to drop 200 points from where we are. Actually, more than 200 points, 262 points, which translates into a drop of roughly 262 points would be roughly a 2100 point drop on the Dow Jones. I do not foresee that happening right away. Okay, 1960. Hey, if everything goes wrong, this is a strong possibility. So 1960 would be roughly 44, 40, 60, about 100 points. That's roughly 800 points on the Dow. So let me get my drawing tool out here so you're fully aware of what can happen if things really go wrong. This is an 800 point drop on the Dow. Okay, and is it possible? It certainly is possible if things really go wrong, both in Europe and in China. That's called game theory. That's called predictive game theory. In other words, you should know all the outcomes of and put in all the variables and keep in, and be aware of all the outcomes that might come if certain events happen. And that's what game theory analysis is all about. Okay, and I don't want to make you a specialist on that. That's something you have to take some very high level advanced courses somewhere else to understand it or read up on yourself. So there is that possibility of that 800 point drop. However, on the bullish side, if things do work out and they hammer out a deal, which I believe they're in the process of doing that in Greece, and China stabilizes somewhat, then we can expect to see the, I'll try to get this. Sorry about this. Then we can expect to see a move up towards 2103. That's around 2108 or so on the S&P 500. So we are looking at a 50-point move from here. That would be roughly a 400-point move on the Dow to complete this megaphone. Okay, so that's really what we're looking for. We're looking at a 400-point move up. We have a lower end of the megaphone at 2021. So we have an equal amount. 2021, that's 40 points where we are, and 40 points from here, a little bit more than 40, 50 points here. So the risk reward is slightly skewed to the upside at this point, as long as we break through this uptrend line. And that's really what it comes down to. As long as we break through this uptrend line right there, Okay, as long as we break through this uptrend line at around 2087, that's about 2095 or so, or 2094 in the S&P, then we're able to get up here. So let's see what happens. So this is a daily chart. I like the way the stochastics are forming. Keep in mind, stochastics can get overbought really quickly on the daily, and of course quicker on the hourly. So you have to be very cognizant how you're doing your trades. So this is what it looks like on the hourly, which is more important to active traders. On the hourly, if we cross over 2085 on the E-minis, then we're going to move up towards the upper end of the megaphone. Simple. And that comes to roughly 2114 on the S&P. Let me put up the SPYs up here so you guys can see what's going on. So here's the picture of the SPYs. We have a sharp rebound in play. So the SPYs moving over 208 would generate a move up towards 209 and possibly higher. Okay, so that's really what it is. Now, I have a lot of precise charts that I put out there. I asked people to buy the SPY calls yesterday, which are going to look fantastic this morning, probably in the range of 60 to 80%, if not more, for an overnight play, and that is nothing to sneeze about. So maximum move on the top of the channel would be 211, which would be phenomenal. Lower end of the move at this point, if we're doing the channel surfing, is 204, let's say, and 204 right here, the bottom of the Darvas, which I also use for trading, and this is where we're trading in right now. So getting all the lines out, want to make it very clear here that you should be looking at the SPYs up here for major resistance around 208. Okay, so another 100 points or so on the Dow, then we are on the top end of the range. We need to break this range in order to break out. And my apologies. We need to break this range that we are traveling in. And the way you break the way I look at it is I'm going to be watching many different internals, including this. We have a McClellan oscillator reading on the SPYs of minus 177, which generally connotates a sharp rally. We have a lot of sentiment indicators showing extreme sentiment. We have a trend indicator, which I've shown on the charts on the Twitter feed, which is showing maximum capitulation, almost maximum capitulation. Trend can obviously go higher. We also have things getting towards stochastics getting towards overbought conditions. So we do have a rally in place. Okay, and these are very powerful. These are three marching soldiers, these candles. So 208 is what I'm looking at to see, and there is going to be resistance there. There also happens to be the downward sloping 50-day moving average on the 4-hour chart. And sorry, this is a 4-hour chart, and there's a lot of things that I'm watching. Stock-wise, let's just put it this way. It was a fantastic day yesterday, making 200% on a day that the markets were down 259 points on selective plays, like the China plays that I picked. That's called tactical trading. If you guys can't take advantage of that, then you really need to see what you're doing. Let me just put it this way. So this one, for example, of course, these charts don't really do justice. My ones that are up there on the real-time Twitter feed on BITA. Let me show you a daily chart. So that's the daily chart of BITA, okay? Bottom line is that we need to move this Darvas up. Okay, the Darvas is right there right now. It's right there on the top of the Darvas. It's just to really make it push up over 50 to get towards the 55, 56, 60 level. It could very well happen. China had a huge rebound. The other one that I picked was YY. And again, remember, I wasn't shading these monsters, when everybody was chasing and they lost their shirts. I bought them off the lows a day late. A day after the bounce started. That's called tactical trading, okay? So you need to take advantage of this stuff big time. It's not a joke. Okay, so on the YY side, it's the same story. We have the Darvas here, in this case 72. So this one's looking like it can really move. This is a daily. Let's take a look at the hourly. On the hourly chart, we're on the top of the Darvas right here, this green line. But you know what? My charts are laid out on the Twitter real-time feed, and I expect you guys to study it and make money off that. That's it. The other one that I like is NetEase, and that has completely broken out. It's 137. I picked it up here yesterday around 129. This one's really moving. Again, I take profits along the way, but I always leave a balance in there. So my point is, you got to manage your own trades. I'll give you fantastic entry points. I'll give you some good exit points too, but you cannot mimic my book. My trading book is